What's up, folks? Welcome to my channel. If you've already been here, welcome back. It's been a long time. I haven't seen you since last year. In this video, I'll be giving you the top 5 indicators that you should use on your chart when reading stocks to understand how charts move. These will be the indicators that are used by the top technical analysis all over the world. You really don't do that many at a time when you're reading charts, so make sure you stay tuned. I'll be giving you my top 2 that I use and show you how to use them on your chart. Without further ado, number 1, let's get right into it. The RSI, short for Relative Strength Index Indicator. The RSI is used to chart strengths and weaknesses in a stock, current or historical, based on a recent trading day period. In other words, in layman terms, what that means is it's a scale from 0 to 100, with 70 being the high mark, 30 being the low mark. Anything under 50 indicates that the stock is losing more than it's gaining. When a stock is overbought, meaning it's on a high uptrend and it's been a lot of volume in that stock, then it'll be above 70. When it is oversold and it is selling off bad, it will be below 30. A lot of technical analysis readers, they use this to see if there's going to be a reversal of momentum in a stock. Number 2, the MACD, short for Moving Average Convergence Divergence. Sounds like a whole bunch of words. The MACD is also another indicator used to show either strong uptrends, strong downtrends, reversals, and strengths in the stock. Number 3, Bollinger Bands. The Bollinger Bands are great for beginners to use when reading charts because you don't want to get too confused with too many indicators. The Bollinger Bands, you have 3 bands. You have the one on the outside, the one on the inside, and the one on the further downside. There's 3 bands. Those can be used as an indicator to show you momentum when something is either, just like the RSI, overbought. You don't want to catch a falling knife. You don't want to buy something that's you're buying the dip and it keeps on dipping and it keeps on dipping and you're not getting that reversal that you thought that you seen. And you also don't want to buy something that's been going for the past month or 2 months. It can also be something that's more detailed than just the indicators that you use. So you want to wait for a clear reversal to jump into something. You don't want to catch a falling knife and it never starts bouncing, and you also don't want to buy the top and sell at the bottom. So the Bollinger Bands I recommend for beginners starting out. Number 4, the moving averages. Just like you heard with the MACD, the moving average convergence divergence, there's also the moving averages that you can use on your chart. Most common moving averages used would be the 200-day and the 50-day. A lot of the traders like to use the 9-day. Probably mainly day traders like to use the 9-day for day trading stocks. Personally, I like to use the 50-day and the 200-day. That does not mean that's my favorite one, so make sure you stay tuned and I'll give you a breakdown of my favorite ones I use on my chart. But I personally like to use the 200-day or the 50-day moving average. Now, if you don't know how to read supports and resistances on stocks, then this would be the perfect indicators for you to use them as either resistance or support. The 200-day and the 50-day will give you a good indication if something is either starting a trend downwards or a trend upwards, or bouncing off of a 200-day or a 50-day average. So those are good indicators to use on your chart, to either use them for supports and resistances or to see if a stock has gained a true reversal or is upholding a true trend, either downwards or upwards. Last but not least, number 5, the VWAP. The VWAP is used universal. Now, when you set up the VWAP on your chart, the VWAP will come with 3 bands. Make sure you only use the middle band on the VWAP. Now, how I use the VWAP is when you use the VWAP, you can see if something is falling below the VWAP and gets rejected at the VWAP, then it's probably going to be a trend downwards. If it's staying above VWAP, a clear indication that it's staying above the VWAP, then that's a strong momentum of an upward movement. So that's pretty much how the VWAP is used. You can use the VWAP as a rejection point if you see something pull up to to the VWAP and it gets rejected and it doesn't pass the VWAP, pretty much you'll see, more than likely that's going to go back down. Now, if it's a bullish trend and it's going upwards, then the VWAP will be used as a base for you to be able to enter, because just because something's going up doesn't mean that you don't want to go get in. If it's a strong upwards trend, then you still would like to get in. You still can make money. You buy low, you sell high, but I'm a firm believer that you can buy high and sell higher. So you would use the VWAP as a indicator to show where you should be able to step in. So if something's staying above VWAP and it's clear as day above VWAP, and it comes and it pulls back to VWAP, that's when you would get in from that bounce up from the VWAP. Like I said, that's last but not least. A lot of technical analysis chart readers, they use the VWAP and only the VWAP to read charts. So if you stay tuned this far, then I will be giving you Davion's, not to speak in a third party, but I will be giving you Davion's favorite indicators to use. And that being number one, the MACD. You cannot go wrong with the MACD. With the MACD, you see that it'll show you when the trend is going up. It'll also start giving you colored lines on the histogram to show you when that upwards trend is starting to pull back. If you read the 1 minute chart, that's for foolish people. You don't read the 1 minute chart. The 1 minute chart shows you nothing. But within 1 minute, even day traders who trade constantly throughout the day and buy and sell throughout the day, the 1 minute chart does not give you a good indication on how to read a chart. So the MACD will give you a histogram and you'll see two lines of momentum, two momentum averages. So you'll see both of those moving averages either going up or going down. When it's going up, it'll give you green lines to show you that this is a strong bullish trend. When it's pulling back, it'll start to spit back white lines. That means it's starting to come down. Get the F out is what it's saying. So when you see white lines, it starts to pull back. That is an indication that upward strong bullish trend that was going on is starting to have a little. That doesn't mean that it's going downwards and it's on a complete downwards trend, but it does mean that it's going to start to pull back. So that's when you will want to sell at that top. When it's reversed and it's a downwards trend, you will see red lines. Of course, it's going down. So there are strong red lines. The first indication that it's starting to turn bearish, you will start getting those white lines from the bullish trend. Those white lines eventually, when it's a bearish trend, turn into red lines. So when the first red line comes, it's going to come as a really small red line. The second red line indicator, medium size. Third, a little bit bigger. Fourth, a little bit bigger, and then goes so on and so forth. Now, when that bearish trend is starting to reverse and starting to go back up, then the red will go from red to light orange. So that will be the first indicator to show you, okay, it's not so bearish, it's not completely going down, it's starting to bounce from here. That's when you would not necessarily buy, because also with that, this is another way to be able to use the MACD. I'm giving you all of the secret sauces right now. On the histogram, it'll go from red to orange. Then the bar, because those lines got longer and longer, the bars will start going shorter and shorter because now it's going up. So those bars will become shorter and shorter. When you get the two moving average convergence divergence, if you get across on the MACD, then that is telling you it is for sure a buy signal. You also have the histogram showing you that it's picking up, and then you have the moving average convergence divergence, both of the moving average lines crossing to show you, hey, this bearish trend is over and we're going back up. So that's my number one favorite indicator to use. Number two, my second indicator, I mean, when I put these on, they're on. When I use my indicators, they're on together. And I'll give you number three too. But number two that I have to live with is also the 50-day and the 200-day. So the 50-day and the 200-day, you probably see I got excited about talking about it a few minutes ago. The 50-day and the 200-day is something that I also like to use, because with the 50-day and the 200-day, those give you either buy signals and sell signals. That's what we're here for, right? We're here to know when to buy and we're here to know when to sell, right? So those give you buy signals and sell signals. Also, they give you long-term either golden crosses or death crosses. When you get a golden cross, know it's up from here, baby. It's going up. When you get a death cross, that's all she wrote, and it's down to the dirt. So the 50 day and the 200 day, if you get both of those to cross each other, the crosses up, then that's a golden cross. And if it crosses down, if those two moving averages happen to meet up and they happen to cross and they happen to see each other at these cross streams and they decide that they want to touch each other, that's between them. But that means something to us technical analysis readers. What it means is if they touch each other and it goes up, then that's a golden cross. It's going up. If they cross each other going downwards, then that's a death cross. So that's something that you can use for the long term. Also, I told you earlier that the 50 day and the 200 day moving averages can also be used as supports and resistances. You should already, maybe you don't know how to read support and resistances, but we'll go over that in another video. But if you don't know how to look at supports and resistances, or if you have a hard time getting a good reading on supports and resistances, then the 50 day and the 200 day are there for you. They're there to show you where something's going to get rejected at, and they're there to show you where something should bounce at. Doesn't mean it's always going to get rejected. Doesn't mean it's always going to bounce. It can fall through support, or it can break through resistance and become a complete breakout. So these are all just indicators for people to get a better guide of understanding how stocks move and what the next near-term goal could be, or the future goal, depending on how you look at a stock. My third favorite indicator, I said I'll give you three, would be the RSI. But to be frank, my favorite indicators are the MACD and the moving averages. I have to leave those two on at all times. But if I do have a number three, it would be the RSI. The RSI is an indicator that's used to show you like, okay, something's been selling off too much, maybe I should enter. But it does not give you an indicator like how the MACD does. The MACD gives you a clear reversal of a trend. If it's going up, then it's showing you it's clearly going up and you have time to get in. And if it's going down, then it's telling you when it's about to reverse and go back up. Because I'm a bull, so I'm just worrying about when it's going back up. But that's my favorite, the MACD. Second favorite would be the 50 and the 200 day. Third favorite would be the RSI. So that's it for this video, folks. I hope you guys like the top 5 indicators that I've given you to use on your chart. And if you do like it, if you don't like it, leave a comment. Let me know what you think about it. Hit the like button, hit the subscribe button, and until next time.